Good morning, everyone. Welcome to the modern market, where every day we discuss everything to do with the modern market. That is the crypto market, the NFT market, and how down bad your bags are market. A lot of red today. We're going to be discussing it in just a little bit. Loaded up for discussion. Bitcoin has lost 100K. Its market hit with aggressive sell-off after Chinese DeepSeek AI launch. What on earth does that mean? We'll break it down in just a little bit. Number two, Abstract announced 17,000 applications submitted to stream on their platform as they ready for launch date today. Pretty exciting stuff. We'll get into that in a little bit too. And then finally, big news coming out of Jupiter in the Solana ecosystem. They acquired Moonshot and announced a Jupiter token buyback, sending Jupiter up 40% yesterday, up to $1.2 before a big pullback, along with the rest of the market pulling back. We've also got the latest on price action on crypto and NFTs, as well as another sponsored segment on the creator economy and how we are pursuing our on-chain media, building that out. So stay tuned for that. We've got Legendary and Bread in the co-host seats with me. We're ready to get into it. But just a reminder, friends, that nothing that we say here is financial advice. This market is very, very risky. We don't know anything for sure. So please proceed with caution and exercise your own judgment. With that out of the way, Bread, it's Monday. It's the 27th of January. How are you doing? How are you feeling?
Hey, buddy. I'm doing good. Coming off a nice, not too busy, not too down weekend. Yeah, I'm in a new city, so like every weekend's an adventure for me. It's just trying to see what the new norm is. Went down to the farmers market. That was awesome. Got some.
Sounds very pleasant, Bread.
It was pleasant.
You sound very unaffected by the market.
As you know, prices don't hit my table until they're delivered by BCheck Monday morning.
Did you even know that we were down today?
I had no clue. No, I had
really?
no clue.
Not at all.
Not a one. I did because I saw like Sammy's thread of like markets down because of DeepSeek, which we're going to cover today. But it's like, bro, I spent all weekend responding to Discords, reaching out to people, scheduling podcasts. Like, bro, I am to a fault in it for the tech. That's what interests me, and that's where I'll stay.
Sounds good. What's this comment from Moxie Legendary that you just pinned up?
BCheck continues to either ruin or make Brett speak every Monday. I don't think this is the case. I just really think that Brett doesn't care about the price action. The only thing how BCheck could make Brett's Monday is by saying Bitcoin is up 1,000%, currently sitting
at
Bitcoin.
So no, yeah, I wouldn't do shit to me. It's just like, cool, bros. Like,
ETH would still be at 3.3K, right?
You guys don't know this. I talked to Legendary and BCheck before the show a little bit, and we're like, oh yeah, what'd you do this weekend? My stuff, or like yesterday, and they're like, Legendary, boom, hit 6 figs, smashed a trade, crushed it. And I'll go in the other room. I'll talk to my girl. I'm like, hey, yeah, Ledge killed it this weekend, made 6 figs. Just cool. I'm like, guess what I did? I wrote up the Bread. It was interesting for me.
Good done.
And it's just like, yeah, that's it. That's my life.
There we go. Crushing it either way, though, I think, Bread. Legendary, what's going on your side?
Yeah, it was a very intense weekend. Probably spent most of it up until 3 a.m. And I said, today, Monday, market is shit. It's gonna be chill. Might gonna go out, do a bit of shopping, get some other.
What was your reply to Steve? In a group chat, he started a group chat, and Legendary responded at like I don't know, it was like 4 a.m., 3 a.m. his time. It's just like, what the fuck are you doing up right now?
Yeah, he said, what are you doing up at this hour in your time zone, you crazy bastard?
Yeah, no, what did you say though? Because you're like, oh, the sun doesn't matter when liquidity is high or some shit like that. Like something purely based on trading.
Yeah, I said volume is good. There is no time zone.
Yeah, yeah, there you go.
Yeah, you know how you get those sleep trackers? Legendaries is not a sleep tracker. It's just the volume chart. And if the volume is high, he can't go to sleep. And if the volume goes down, that's when his heart rate comes down and he gets like...
we have a circadian rhythm. He has a liquidity rhythm.
Yeah, exactly. Liquidity rhythm. That's the new dance of life for Legendary. Right. Talking of liquidity, let's get into the main headlines as usual. Getting into the main price action, starting with the majors, because there's a lack of liquidity going on at the moment. Bitcoin is down 5%. It's lost 100K. It's at $99,000. ETH is down 7% to $3,070 for one Ethereum. And Solana's down almost 11% to $227. But it's not just those coins, right? Everything looks like it's slaughtered today. XRP down 10%. BNB down 5%, Dogecoin down 10%. Getting into on the meme coin side of things, let's see how things are faring over there. Not very good is the answer. Doge is down 10%. Pepe's down 15%. Trump is down 10%. Bonk's down 15%. Pengu, after rallying quite well, kind of going into the abstract launch in the last 24 hours, given up, I think, all of those gains and a bit by being down 15 or 14% at the moment. Everything seems to be down, between 10 and 20. Even the AI stuff, AI 16Z is down 20%. Toshi, which experienced like an absolute giga pump, is up 169% in the week, but in the last 24 hours, also got aggressively sold off.
Coinbase still has motion. They listed it and it's been up only.
Yes, that is what happened there. AIXBT down 20%. So to the extent that AI and memes are like different things, and sometimes AI is doing well when memes are not doing well, it seems like both categories have been hit pretty hard here across the board. There's nothing that is standing out that seems to be fine. But that's that. What about what's going on? Oh, let's get into the headlines first, and then we get to the NFTs. As we said, Bitcoin's lost 100K. We will be diving into what Chinese DeepSeek AI launch means. Brett's going to be sharing some information there, trying to get a good handle on what's happening. Then we're going to be talking about Abstract announcing 17,000 applications submitted to stream on their platform as they're ready for launch day. We'll have some general thoughts on Abstract as well. Some thoughts shared by Saigar, which we'll dive into. And then finally, Jupiter acquired Moonshot, announcing a Jupiter buyback, sending Jupiter up 40% to $1.2 before a pullback to 0.9. I've seen people getting very, very bullish on Jupiter. So we'll break that down in a little bit as well. Legendary, what's going on the NFT side of things?
NFT market is brutal. Basically, everything is down. Pudgies are down 8.6% over the last 24 hours, sitting at a 15.3 ETH floor, getting closer to the Bored Ape floor. Actually, Bored Ape's also down 4%, 13.6 ETH floor for them. Milady's are down even more, down 16%, 5.18 ETH floor for them. Basically have given back all the gains over the last week, because still over the week they're down 0.4%. They did go as high as 6.5 ETH actually, but lost again almost all of that. Doodles, same picture, down 8.7%, 5.3 ETH floor for them. Also gave back all the gains over the last week, except for 2%. And Azukis are not down, they are up 0.8%, but obviously they are sitting at a 3.9 ETH floor, and they are down 62% after launching the anime token. B, you are on mute.
Excellent summary there, Legendary. Thank you for that. Let's get into the rest of the Web3 Roundup to get us through with everything else that's happening across the space. You've got A16Z closing its UK office to go and focus on the US. That's kind of bearish the UK, but I guess, positive sentiment in the US is going to be attracting probably not just their business, but a lot of people. Tribe revives SocialFi with numerous popular accounts posting about their signing up. This seems to be like a FriendTech 2.0 type of product. People getting quite excited about over the weekend. Would be curious to know if Brett actually tested it out or knows much about it. I did not test it out because I didn't want my coin to be trading. Basecoin Moon Toshi was up 100% to 800 million before pullback to 550. FAFO meme runs as high as 80 million after Trump Truth Social post, but pulls back to 25. Everything that ran yesterday is obviously pulled back quite aggressively with the rest of the market. Vibes Pudgy Penguin TCG announces championship to qualify for 2025 World Champs. That is fun. Mad Lads Exchange Backpack announces public beta is open. And then finally, a piece of news from the start of the weekend, which feels like a long time ago. Bloomberg reported Elon Musk is exploring blockchain to increase US government efficiency. A bit of a mix of things going on. Obviously, we'll get into the main headline stuff as it relates to AI and crypto in a little bit. But just coming to you first, Legendary, for any thoughts on what else is happening in the space from the Web3 Roundup.
Yeah, I want to touch on the A16Z story because we talk a lot about mercenary capital in this space, and we like often, portray it to not be the best thing. That straight after anime token has launched, capital is flowing into Doodles to basically anticipate the next airdrop. The same thing with moving funds to L2s that are launching, farming them, and then moving away. But ultimately, this is what the real world does as well, because I very well remember on this show when we were excited to talk about A16Z coming to the UK and opening their offices there. And we talked, oh, VC capital is coming to Europe. We're going to be the crypto hub. We're going to be the AI hub. And now, the regulatory landscape looks nice again in the States. Trump is in office, and A16Z goes, nope. Mercenary capital moves back into the States because we just, as we are seeking out the best L2 in crypto, they are seeking out the best regulatory landscape to operate under. And capital is mercenary as well in the real world. It's not a Web3 phenomenon.
Do you know what? It's such a great reminder that regulation and policy changes. Like I think someone wrote this yesterday and we shared it on the show. I think it's a very good thing to be thinking about. It's probably too early to need to think about it because there is going to be a loosening of stuff for the next 4 years and things will be looser and more positive and everything. But to think beyond that, to think that this is the be all and end all, like things have now opened up and that's how it's going to be forever, I think is quite naive in the sense that, look, we're going to open up for the next 4 years, guaranteed. That will allow more people to do more things in the US. However, if there are crazy excesses and things go poorly in particular ways, the pendulum of regulation can swing just as fast as it opens the door for you, and it can close the door on you very quickly as well. If too many people are considered to be not conducting themselves in the spirit of the law, even if the laws aren't perfect, if things are not being done in the spirit of the law, which might not be like perfectly formulated at the moment, that stuff can change. So I'm very conscious of that. Brad, did you have a comment on that, or did you want to take it in another direction?
Actually,
to point towards something
yeah,
else?
I did actually. So I actually listened to a podcast it was on Chopping Block, and it had a member from Coin Center on there. Coin Center has famously been around for a long time, and they've been defending us in the regulatory landscape, especially in the U.S., trying to fight the Roman storm, all this stuff. And they actually had a little bit of hesitation going into this next 4 years because they're like, like we're coming into a period of time where regulation can be implemented, things can be good, and like things can open up, but like the aggressive iterative process can also be done in an impure way, right? So like they can put in a bunch of rules in the next 4 years that don't align with the ethos of crypto or don't like truly understand the space. So it's very important that we have conversations at that level that like, one, yes, like these rules can change, and like there's a lot of scammers in this space. We all know that, right? So like if the wrong people get into the wrong places and like have the ear of the wrong person, a powerful person, they can implement some shit that is just frankly not conducive to this environment growing in a good, safe, structured way. So they're like, dude, like it's exciting, but it's also like we need to be, like up our level of attention these next 4 years because we cannot risk something getting in today that is going to harm us for the next 10, 20, 40 years. Like, these things have processes and that stuff takes time.
Yeah, I saw an interesting tweet. I think going in that direction, Brad, which was something along the lines of, the various special interest groups you talked about, like trying to get the ear and attention of the people in power. Like there'll be certain people who will stand to gain a great deal if, when these things are formed, when these new regulations and clarity is given, that if they're formed in a particular way, right? So being conscious of that, but I guess that happens all the time.
The Melania Trump coin fiasco is kind of a reflection of like how broad, even within that circle, like this stuff could be, right? The Trump team came in, they had a call with, people from Blockworks. They made sure that they had like listings in the right place. They made sure that they were plugged into DeFi. They made sure they followed the right process, everything. And it was very successful. And then immediately after, a second team just yeeted Melania out into the world, right? They did not care. They just started pump, boom, boom, put things out in the world. Like, let's have some, like, so it's, yeah, like, yes, even inside of the same family launching a coin, there are so many people trying to get the ears of these people that like you can have such a starkly different approach to this space and like how it can be handled and what can be done. Like, yeah, man, like there's a lot of people out there that are just like money's a hell of an incentive.
It is indeed. I don't know if that's. I think it's helpful to have that other side of the conversation, right? Like people have gone so hyper bullish, but you know, there could be excesses, and it's worth thinking that you can always get rugged by regulators as much as they, you know, can be helpful. You know, it can cut both ways, basically. Brett, I want to give you a chance to touch on the social fi stuff because I know you're super interested in that area, and then we'll keep it moving, get into the main headline AI crypto stuff in a bit.
Yeah, I'll double pump here. So you mentioned the Moonshot acquisition by Jupiter. Now, was that Moonshot the launch pad that was the counter to Pump Fun? Or is it Moonshot? Because Moonshot was a thing that was launched by Dex Screener that was a Pump Fun clone. It's actually really nice, but it was just like it didn't like Pump already had an entrenched holder base. And then there's Moonshot, the Web2 app that lets you like trade really quickly. Because if they got acquired, that's actually really surprising to me because they had a hell of a run, and like I'm surprised they would want to give that up. I'll let you search that up, and then the second
I'll double click on that while you talk about Tribe.
Okay, and then Tribe, yeah. So Tribe is kind of like a FriendTech clone. I actually joined it. I don't know, 4 months ago, because Imran and Bill, the founder, they knew I had a lot of thoughts on FriendTech, which is a really similar idea. So they looped me in. They're like, hey, you want to test out the thing? You want to see what's going on? So I got in there, and yeah, I had a lot of back and forth with the founder, gave him my tips and like just product ideas. You know, that was my product arc, where I just had people like, hey, reach out to me if you guys want me to like talk about your shit, right? And I came in, I helped, and I, gave all that stuff and talked about like the structure of their contracts and, what feels good, what doesn't feel good, kind of where things went south for FriendTech, frankly. I fell off it. So I did it for pretty strongly for like 2 or 3 weeks, and then I just didn't really touch it like most people, right? You see Travis Bickle, who, he's because it's from the Alliance, right? So, the Pump Fun guys, the Fantasy Top guys, like all those people are on the same cohort. So they were on there.
Cohort of Alliance DAO, which is like this Web3 very excellent accelerator.
Right. So they were all trying it out and like, betting on their buddies, like trying to, see other products going, all that shit. And so Travis, he hasn't been on there for 2-3 months, but when it was going early on, when I was on there with him, he was just buying up a bunch of people's shit. So like ICO Beast made a little tweet that like Travis hasn't been on the platform in 60 days, but he has a wallet that's now worth like 300 grand because he was just buying everyone's keys early, just all over the fucking place. He had a bunch of CBB keys. He had a bunch of like a lot of us were on there just like poking from the FriendTech stuff, but you need a critical mass of people for it to take off. And there are some nuances here. Frankly, after playing with it again this weekend, I'm just so scarred from FriendTech stuff that it's like it takes too much attention from Twitter. Like you're competing with Twitter. It's so hard to do that. And frankly, maybe now it's closer to Solana, people are willing to deploy capital into it, but still it's just like it's very, very hard to keep people's attention off of X and Telegram, frankly, those two things to start a new thing without a tease of a giant airdrop, which is not going to be as alluring as it was before because, FriendTech defined a category. So people thought it was going to it's worth it to do this because this thing can go to gorillions of dollars. It went to zero, as most things do in this space. So you're not going to have that allure to keep people on the platform to redevelop habits that you have to actually develop for those things to be successful. So cool. Awesome. The founder's amazing. He's a really nice guy, girl. Actually, I don't know if I can know his name's Bill, so I'm assuming it's a guy. And like the platform's fun. It's in a little like a Windows 95 aesthetic. They could do some live streaming and stuff, but yeah, I'm skeptical on that vertical right now.
Fair enough. I think that's very, very fair. So maybe like a little too similar to FriendTech as it stands. I'm finding it very difficult to compete in terms of attention when these platforms require you to do actions outside of your usual actions. I think that's one of the things which people have found quite good about Kaito, for example, or quite good about Fantasy Top. It's like, yes, there's some metrics being measured in the background, but you can just basically go about your normal business and tweet and do what you do best on the timeline. So interesting reflections there. Let's keep it moving. As I said, we're going to get into the big headlines of the day in just a little bit. Oh, just to come back to you on the moonshot thing, Brad. it is the main moonshot, the one where you can buy and sell
That's crazy
memes
to
on
me.
Apple Pay. So that's like a huge acquisition because
Yeah.
they, as you say, have been doing fantastic. They've onboarded a huge number of people.
I
In
wonder
the
if they
last,
started that so early, like before this recent surge, that they're like they went through with the deal as opposed to like, because like if you're that moonshot team, why are you making that's like selling if you're pump fund right now? Like, bro, you own that vertical. Why would you want to let go of that? But yeah, maybe there's some synergy there. And Wear Me Out Smart, I've met him in person a few times.
yeah, I think. Well, at the same time, can take some off the table, right? De-risk when you're really, really hot, which they definitely are at the moment. So, congrats to them. Congrats to both parties, to be honest. Right, we're going to get into the Bitcoin story in a second and what's going on with the Chinese DeepSeek AI launch in a little bit. But just before we get there, let's get into our weekly entrepreneurial segment, Publish and Profit, where we explain some of the key secrets and tips to making money online as a creator. And we've got a fun one today because we are practicing what we preach in some respects. Today, we want to thank you for the 650 mints of our first NFT of our interview with Bing from Mega ETH. And we're going to share some of the key stats you might find interesting as an online entrepreneur. This segment is brought to you by Little Nouns, an expansion DAO based on the famous Nouns DAO who fund cool creative endeavors which can proliferate the Nounish meme. So the first thing you might want to know is the headline numbers. So we minted 654 so far, although this is an open edition, so no stopping anyone from collecting in the future. The top 3 minters each minted 100 NFTs or more, and you can see that on the leaderboard on the right. That was legendary. Rahim, great friend of the show who joins us every Tuesday, and Mintify, the NFT marketplace with whom we were partnered for some time and we still have a great relationship with as investors. The first collector was Lully.eth, who discovered the mint was live well before I announced it on the show or by tweet. In terms of the leaderboard of collectors, this is a cool feature that they have. Everyone who minted more than 1 got into the top 42. Everyone who minted more than 2 are in the top 29. People who minted 5 or more were in the top 22. And positions 11 to 4 on the leaderboard are people who minted between 10 and 20 editions. We can also see the first mint was 3 days ago, the latest mint was 3 hours ago, and we have 133 unique collectors, which is 20% because a number of people minted multiple. So what are the learnings from our experiment of going on chain with our first NFT? But remember, we're going to be doing this every single week. First, this is fun. I think people enjoyed supporting us. It was really awesome to see people kind of sharing their mint on the timeline. We appreciate that. And it was fun to design and see people support us that way. Second, it's good information. We speak to more than 1,000 of you each day, and we have a bit of a back and forth with you in the comments on YouTube or X, but it's hard to measure that contribution over time. So while this is not perfect, as it will, of course, miss out on a lot of the other meaningful human interactions with people which we value, it does give us a chance to note who's supporting us on chain most and most routinely. So even if that is only one of the factors we value. And finally, partners have noticed. Mintify were not the only big company to mint, received other messages from companies noticing and thinking that this was an intriguing model. And I hope there are ways for us to work with partners in a way that is beneficial for them and for our audience. That's the thinking. I want to go to you, Legendary. How did it go for you? Any key learnings from your side? And were you surprised by anything at all?
Yeah, I'm very, very happy with the mint. I'm honestly surprised because it went so smooth. Like it just worked. And it was very well received on the timeline. A couple prominent people, including Steve, posted about us. We're very happy like to share that. So that was, very, very beautiful to see. The thing that really surprised me is how many people minted with their basically public ENS. So like also vocally supporting, including Rahim, including Steve, including many, many other people whom I just know by looking at the ENS. And that was, for me, the interesting thing to do, to go through some of those wallets, obviously from also the people whom I don't know, and just get a feeling of what kind of people are minting that. And that's exactly what we kind of also wanted to do with that. We've been very honest about that, to get a feeling of who our on-chain community, plus obviously also listeners of the modern market are, and how this segment of people looks like.
Absolutely. I think that makes a lot of sense. We're going to continue doing this. Remember, we're going to be doing this every single week. Looking forward to minting the next headline interview. We'll probably reveal who that is tomorrow on the show. So looking forward to that. Shout out to Lil Nouns DAO for sponsoring this segment. Lil Nouns is an expansion DAO based on the famous Nouns DAO who fund cool creative endeavors which can proliferate the Nounish meme. Just a quick follow-up with Overarch in the comments. If you forgot to mint, no stress. It's an open edition. You can mint it now, you can mint it tomorrow, you can mint it in 6 months' time. But there'll be another one on Friday to commemorate. Well, I think the interview will be on Friday. Maybe the mint will be on Monday to commemorate the next interview we do. And it's a big one, guys. It is a big one. So looking forward to that. Now, let's get into the main headlines as we promised. Brad, people are concerned about Chinese AI called DeepSeek. The market has reacted very poorly. What is going on, my friend?
Yeah, this one's okay. So headline: BTC loses 100K as market hit with aggressive sell-off after Chinese DeepSeek AI launches. So I was looking at 3 articles around this one. So the first one coming from Chamath, which is talking about, so DeepSeek is an AI model that came out of China. And the reason that it's causing a big stir is it largely, it's just proving, well, at least there's some conspiracies because it is China. So like everything can't be trusted wholly, but everyone is freaking out because this AI model came out and it's bigger, better, badder on less, right? So if you get on less being like hardware and costs on all this stuff, resources, and 1, people don't know if that's true. And 2, if that is true, then it means all these billions of dollars that people have been burning to do this shit has frankly not been not going to be well received if you just see like, oh, a scrappy young team out of a foreign country comes in and just crushes everyone. So there's a couple of conspiracies around this. One is that like it's a Chinese plant to like get people to install a bunch of shit in America because it's the biggest, baddest AI. That's just like what, cheap, whatever. But going through the 3 articles, like these are the things that we can deduce based on the current information. So Chamath's talking about, okay, the reason it's so successful is because they changed the reward model of the actual AI itself. So previously, the AIs, as they train themselves, they could get like reward hacked, is what they call it. And that just means like it could optimize for its own rewards. And because of it doing that, it didn't necessarily lead to it being better. It just like got its reward better. So they restructured it to do it based on like it's an iterative structure based on like it producing its own structured responses. And then the accuracy of those responses allowed for it to like continue to grow in a way based on its data set, continue to grow in a way that was very productive and led to a better model overall, right? So like it was just a unique twist on how it was rewarding itself versus just like raw, like, engineering prowess, whatever. So that's one of the speculations on how they're doing it. Again, I don't think they have access to the actual code itself. So no one knows for sure. That's just like the things we've come to understand. 2 major implications of this. One is it means the cost of building foundational models is going to go downhill fast. So this stuff's going to be commoditized basically. And that means everyone that's been, again, spending billions of dollars in data centers and stuff is going to get a cold, hard look at themselves. All these investors are like, dude, we just spent, our entire net worth on you because we thought you were going to be the next, open AI. But it turns out these scrappy teenagers from China are dunking on you and like everything is worthless now. Or like, again, China is completely lying about this and it's just a way to infiltrate America, right? It's just a way for them to get people to install a bunch of shit on their computers. So like, approach it with caution. And then Santi actually he commented on this as well, and he said like just with this next AI wave, it's going to be more about scrutiny on how AI is going to impact the bottom line of a lot of these companies. Now he didn't say it explicitly. Like one is just like, yeah, like some companies spent a bunch of money on this, so it could be on just general capex, where like how much did you spend the last quarter, half a year, whatever, on trying to up your AI game, and then did you just like liquidate your treasury basically effectively? Or like I wonder if there's going to be a human angle to this, of there's going to be scrutiny coming down to like a resistance from the government that says, hey, you're doing all this AI shit so you can get rid of all your humans, and like that's maybe not great for us as a country. So don't do that. And like, again, how much effort are you putting into that? Like, is robotics, so it's not the same, but are you McDonald's and you have 100,000 stores in America and you're trying to get rid of all the people at the counter because you want to put a robot arm there that can do this shit? Again, robot versus AI, but still like the same principle of like, are we putting a lot of humans out of jobs? What's the long-term effect of that? again, I don't know if that's what Santi's getting at specifically, or if it's just burning your money to actually have AI within your company, like to homegrow some stuff. But in general, like again, this thing has come out. It's scaring a lot of people. A lot of money has been wasted because this race has been on, as we've seen. Every other week there's a new model that comes out. I've switched from Claude to OpenAI to to Perplexity to whatever, and whoever comes out with the biggest, baddest thing is going to have probably a little bit of a power law associated to it. And if you can have a true edge, then yeah, you gain a lot of attention. So,
Legendary, you just come in first, and then I have some questions.
Yeah, absolutely. Just a couple more info on the success of DeepSeek. Hit number 1 in the App Store. They are marketing it also very, very aggressively. If you take a look at the website, literally on the top it says DeepSeek is live and open source, rivaling OpenAI's Model O1, available on the web app and API. I think one of the things that I've been playing around with it over the last day that's very impressive with it is the speed that it answers your prompts with, because similarly to O1, if you've been using that model, you know that you can basically look into ChatGPT's thinking process, where it is kind of trying to figure out what you said and how it should reply to that. And DeepSeek does the same, but it does it extremely, extremely fast. So basically, I asked DeepSeek the question, can it be the case that training for DeepSeek was so cheap at 5 to 6 mil? And it's like, you get an instantaneous thought process. And the moment that the thinking is finished, which you see live without any delay, you have your answer, which is very, very in-depth ready. So it's just from a user experience perspective, it looks and feels, because obviously a lot of us won't understand like the differences in computing, coding, and mathematical problems, but just because of the speed of the user experience and comparing the look and feel of the answers and the thought process makes for a very impressive first appearance of DeepSeek as well.
I know there was a clip that came out I think it was this weekend. I just remember seeing one. It was a younger person from DeepSeek talking about the actual thing. It's like, like the narrative is it's a small, scrappy team. They don't have a lot of hardware. It's just like, it's just so efficient, so good, so whatever. But they're like, we have 100,000 GPUs that we can't actually talk about because of some not immigration, but import tax rules or whatever. So like that's the big thing of like Legend just said, this thing's very impressive. It's very responsive. It's very powerful. Like you probably need a lot of hardware to do that kind of stuff. So people are skeptical that it's, a homegrown shop with some startup guys actually just doing this stuff. It's not like funded by the deep state that has, a gorillion of these hardware pieces tucked in the back that are actually doing all of this stuff. And, it's just, there's some skepticism there.
Great points. To kind of take it further, I know people have responded the market has responded very poorly to this, and maybe justified in the sense that there was probably an AI bubble going on, and yes, people were overspending and it was potentially getting very, very inflated, right? But I think maybe in the medium to long term, I've seen a couple smart people share a thought like this, which I'm about to share on screen, which is by G Money. He said, this DeepSeek model is short-term negative for AI sentiment. So yes, in the near term, the people who've spent, I can't remember how you described it, Brett, but like overspent, spent the house on, thrown the kitchen sink. I don't know why I'm going through various items in the house. But people who've overspent an AI, it will be bad because you've overspent, and that's not good. However, long term, it is bullish as the cost of models will go down. So that should be better for people in the long term. And the CapEx will be spent on the next leg of the AI arms race. So DeepSeek being
remember, like this stuff brings down the production cost of basically everything, right? So like that's broadly how I view AI is because models come forward. It did originate with OpenAI, right? ChatGPT. The production cost of writing a program, the production cost of generating image, the production cost of like the human production cost of doing this stuff came down massively across the board. So yes, like the actual production cost of the models themselves is very robust, and people are again burning down the house with all like their entire treasury is going out the back door because they want to either acquire GPUs or they want to, buy the brightest minds in the world, right? People are saying like, 4 of our top 5 members of our company are making more in salary than the entire team of the DeepSeek team, right? So it's like people are spending a shit ton of money on this stuff and hardware and people and everything, right, to do this. And it's very pointed at the thing that's being created, which is the model. But the human production costs go down basically across the board. You and I can can do AI audio, or not audio, captions on a video after the fact super quick, right? The production cost of us to create that content, to do that thing, is going down across the board. So that's why we're seeing the proliferation of so much shit, because everything else that is human is coming down production cost wise, but the production cost of the actual models themselves is gargantuan and going higher. But if that can, this can be commoditized too, then yeah, it just continues the trend of everything being commoditized, including, just the things that we produce.
Interesting. Yeah, good stuff. Legendary, I don't know if you want to come in there, otherwise go to Funky. He's got his hand raised.
Let's go to Funky, and then I'll have a thought after that.
Okay. Funky, welcome to the stage, my friend. What's your thinking here?
DM gang, and what I'm about to say is incredibly speculative. However, it's built on the fact that I work for an infrastructure provider that is vertically integrated throughout the stack. And I'm thinking about specifically Fred and Mega Eats team Elon, right? If you know how to manipulate hardware down at the granular level, you can eke out optimizations that are not possible with hyperscalers. So when you think about most of the AI models now, they're running on hyperscalers, AWS, Google Cloud, Microsoft Azure, some giant server farm that no one can put a hands on. If you have a young, scrappy team that has 100,000 GPUs tucked away somewhere, they can actually probably do things at the machine level that would help optimize these things in ways that you cannot do. Like literally, it is impossible to do with a hyperscaler. So I'm not saying that this is the case, but if there is some veracity to these claims, if it is a young, scrappy upstart team that has really good hardware engineers that know about how to maximize IO and everything else, it is really plausible. So, just wanted to lend that sort of blockchain infrastructure provider insight to the conversation, because, you, like our guy, I had a mentor, TK, is very much like Elon, knows how to make hardware sing with software. And if you're not doing that in an optimized way, you're going to have a lot of big problems.
Thanks for the insight, Funky. One follow-up question immediately is try and, break it down in a slightly more explicit way. So you provide this infrastructure. Is this good news for you? Is it bad news for you? Your costs are just coming down, right? Is that the key conclusion for you in the realm that you operate?
It's good news for us because of the way that we're built, right? It's heavy CapEx up front because we have to own all our hardware. But we have
and just explain what it is that you do so that people just get that.
So we, Global Stake, my company, effectively runs enterprise-grade, institutionally focused hardware. So we run only bare metal that we own. We do it only in Tier 4, Tier 5 SOC 2 compliant data centers. We ourselves are SOC 2 certified. So we're trying to draw institutional interest. We know that,
and that means your costs have come your costs will come considerably down, right?
It's not so much that our costs will come down; it's that as the costs drive up. For instance, here's a really good example. We have on all of our servers 2 10 gigabyte lines. If you were a hyperscale and you want to go to 100 gigabytes, that's going to be a 10x cost. For us, it would be 50%. So because we own every part of the stack and we're building it like we're a telecom instead of an AI farm, we know how to control those costs and be hyper competitive against the big players.
Got it. Very, very interesting stuff. Always appreciate your additional insight, Funky. Thank you very much. Legendary, I think you want to come in, maybe close this topic off before we move to the next one.
Yeah, I think it will be really interesting if we can learn more about this 5 to 6 million figure that has been shared for the training cost and what it exactly encompasses and what part of the R&D that went into it is part of it and what isn't. Because if I think about something like XAI, everyone's been super impressed with how fast Grok was able to set up their supercomputer. I think they took 100,000 Hopper GPUs, set it up in just 122 days. And XAI, the company raised $6 billion in December as of last year. So just if you compare the magnitude of the $6 billion raise versus 6 million training cost, which is just a thousandth of that, it feels too low for the training part of that. I very much agree with what Funky has been saying, and I think that's a very reasonable line of thought. But I do think that this number that has been shared is not factoring in everything else that would typically go into training that would go into training an LLM.
Got it. So my 2 follow-up questions before we close this out, and I think this is the most important thing to talk about today, so happy to go on it for a little bit longer, is to what extent, like the veracity of it. Obviously, lots of people are questioning the veracity. Is it true? Is it not true? Do you have a read on that at the moment, Legendary? And then we haven't, we've spoken about it a little bit with the implications for the market. Obviously, maybe there were other top signal type of things going on in the market as well, but to what extent do you think this is the reason for today's big moves? How else are you feeling about the reaction by the market in general?
Yeah, I think it is the main reason for the market move. Obviously, there's also the political stuff going on with the tariffs being imposed on Colombia, which was political story yesterday as well. But I do think that if you just look at Nvidia being down 7.5% in the pre-market, that pretty strongly shows that we are correcting everything down from the tech side because of the launch. What was your other question as part of that?
The veracity of the claims. Do you think it's easily believable, important to question it at this stage?
No, I think it's interesting to question it because the company that has launched DeepSeek, basically, or the founder has a way longer history, which I had looked a bit into. It started as Fireflyer, that was back in 2015. They've been buying GPUs for years. They've been working with AI models for years. They've been basically building a supercomputer, I think, back in 2021 to analyze financial data. So there's like a lot of knowledge in this company that is preceding what we see now as DeepSeek AI. So this is why I'm very much doubting the story. Oh, they came out of nowhere and spent 6 million. Here's the model, and it's impressive and it's beating everything else. Because again, look at the founder; he has a very, very rich history in AI.
Okay, fair enough. Look, I think that's a very, very interesting conversation. We'll monitor it as it develops in the next few days and the next few weeks as well. Let's keep it moving though, because we've got another 2 sets of important headlines to do. Legendary, I wonder if it's better to go to Jupiter first, actually, then we'll finish off on Abstract. What do you think?
We can do that. You are testing how well I have structured my my tabs to be able to do that, but we can do that. So basically, looking at the Jupiter ecosystem, there's 2 important things that stand out. Jupiter obviously being the very successful DEX aggregator on Solana, and 2 things happened, one of which we touched on the show already. Brett said it at the start. Moonshot, that very, very successful meme trading platform and app, has been purchased by Jupiter. And the other thing, what also has happened is that Meow, the founder of Jupiter, has announced that 50% of the fees that they are collecting will go into token buybacks, which, as you said, sent the token up 40%. Token then corrected down again from 125 to 97, 98 cents. Now on the day is up another 15% back to $1.05. But the real interesting thing to take a look at is, what does it mean in relation to the market cap if Jupiter is saying that they are committing 50% of the fees to buying back their own token? And Artemis, which is an analytics tool for stablecoins and other cryptos, has shared an analysis and a bit of math on that. And they're saying they see on Artemis there's $80 billion of aggregator volume plus $20 billion of per volume per month. That's 100 bill in monthly total volume on Jupiter. 100 bill monthly volume multiplied by 0.1%, which is the fees they are taking, divided by 2 to arrive at the 50%, which they're using for token buyback, means roughly 600 mil of annualized buyback and a 2.4 billion of circulating market cap. That's roughly 25% of the market cap that will be bought back by spending the fees that they earn, obviously under the assumption that they continue to be able to have 100 bill in monthly total volume on Jupiter. But that is what I thought is a pretty fascinating number, to say that 25% of the market cap basically is being bought back over the course of a year.
Wow.
What are your thoughts on buyback as a mechanism? Feels kind of weak. I get the memes of it, but it feels weak to me.
Yeah, it's kind of an easy thing to do. I mean, it is a strong thing to do to kind of commit funds to that and buy back the token and pump it by doing that, and essentially like burning the token and taking it out of circulation, which means that you have a mechanism there that tries to control the supply of the token, which is probably also an admission that the token supply was too high and you're not happy with what's circulating, because otherwise you wouldn't do that. But just given the fact that when you launch a token, the tokenomics are mostly set and you can't really change at least the structural things of that, it's like one of the easiest remedies to have supply control after that. So I get where you're coming from. It's not exciting as a mechanism, it's not novel, but it also works. But it's exciting from like the number and the volume that they're putting into it, but it's not exciting as something that is innovative in any way.
2 points on that from me. One, I was reading yesterday, Darren, who we all know, shared an interesting thought, kind of answering that exact question. He was writing about why I think he was long dupe. And someone asked, how do you weigh buyback and burns versus pure rev share in Sol via staking? He said, I view them the same as buybacks versus dividends in equities. Buybacks are more tax efficient because you receive price appreciation without a taxable event. So if you're a holder, it's quite good because the number goes up without you realizing any specific gain. However, I guess the question was about specifically buyback and burns, whereas in this case, it's not for burning. So if you look in the details, which is oftentimes the best place to be, he says the platform would begin using 50% of its protocol fee revenue to buy back Jupiter tokens to be held in a long-term litter box, keeping the cat meme alive. So 50% is in the litter box, whereas the other 50% of fees will be deployed for growth, future strategy, and full operation stability. So basically, everything that they buy back is just for holding, as far as this describes, because 50% of the fees, of which 100% of that 50% is just for the litter box, and then the rest of the 50% fees is for growth, future strategy, and full operation stability. So I think in the instances where you don't need to sell and you don't need to burn, I think it's quite a powerful thing when you just want to own the network. I guess in some ways it's similar to what Hyperliquid is doing, where they want to own this whole network.
Yeah, I was going to mention that. Like for me, like I guess it buys them time. It buys both of these teams time, right? You can, over the time it takes where this is a useful mechanism, they can implement other things that apply buy side pressure to these tokens. In my mind, it's just like, okay, you do buy side pressure for a long time through buybacks. Eventually, you're going to want to sell those tokens as a team, right? I imagine they're probably going to want to give up some of that at some point. If you remove the protocol itself buying the stuff, who else is left to buy your shit? But again, you can implement a lot of mechanisms that get people bullish long term. And I guess technically it allows for you to like sell into yourself at a later date as long as you keep that switch on. It's just not sexy. Like maybe that's like Legendary was saying, like it's useful, it's mimetic, it's like, and it is 25% of the market cap. That's actually a lot if they can sustain that. But it just doesn't intrigue me.
There's also token burns, just it real quick. There's also token burns happening, like separate from that. I think there's a $3 billion token burn happening either way. So with the funds that go into the litter box, we don't know what that again will mean in the long run, what that will be used for.
Yeah, and then maybe a final point to round it off, then we'll go straight into abstract to close out. Meow actually said, Meow, the CEO of Jupiter, said, I strongly believe that the value of a token is not anchored in buybacks. Despite what crypto Twitter might tell you, the value of a token is anchored in community. Remember, every coin is a meme coin. I'm just going to share this image for people who are watching in. Remember, we're live.
He's not wrong.
On Twitter video, we're live on YouTube as well if you prefer to watch stuff. What I'm sharing with you is a big image of a cat with a Jupiter logo around its neck. I believe they burned this cat. That was part of what this cat burning festival, Legendary.
Is this some right? Burning Man shit?
They burned the cat. I'm trying to find a video of it, but I'm pretty sure they burned.
Istanbul grand finale. I mean, at top, is that it?
Yeah, here you go. Look,
Oh shit! There you go.
3 billion dupe burned. So this again, if you're just watching in, there's a huge, I don't
It's a
know,
fire festival.
15-foot cat, 20-foot cat. When everyone's just celebrating burning the cat as they burned the dupe. So taking that idea further, it's the community, it's the cult. That's where the value is.
Man, it's
not
got
in
so
the
much
token itself.
energy. I attended one of his things in Singapore. The dude just has
Yeah, we
so
were
much
there
energy.
together.
Oh yeah, that's right. Yeah, dude. Yeah,
That's where we met first. Might have been the time.
it
place we
is.
met
I think
first
yeah.
time.
That's the first time I saw you in person and learned that you weren't AI.
Yeah, that was fun. But as you said, so much energy. So that's the direction they're taking. I hope that was helpful. To break it down a little bit, look, we've just got a few minutes left, and we definitely want to be able to touch on the abstract stuff. Legendary's Abstract Day today. You want to just give us a quick breakdown of it, and then there's been this huge focus on streaming, which I guess is probably worth just touching on the next few minutes. What's your thoughts on that? Is that good? Is it bad? What's your analysis of the situation?
Yeah, absolutely. I'll get into the abstract news in a second. Just have Weedport and a couple other people in the YouTube comments saying that BTC is back above 100K. ETH is pumping 3.1K. Solana is at $230. So a bit of green, a bit of positive energy there. And going straight into the abstract.
Take that, China.
Take that, China. Exactly. Going straight into the abstract headline. Saigar, CTO of Abstract, has been posting that the rollout will be a bit different than what we're used to from a typical L2 launching. Basically, the way it works, when Abstract launches, you can go to the website. There's going to be a portal. You're going to use that portal to set up your Abstract global wallet, which again is the wallet that you need to use if you want to earn XP on Abstract. So it's not going to be the typical process of either adding the RPC or hoping that your wallet provider is supporting that. They very much want you to use and incentivize to use their wallet, which is a wallet that also works with social logins. It has multi-factor authentication as well as passkey sign-in. That's something that I want to look into exactly how it works. I think that's relevant for everyone who wants to deposit more money into Abstract to understand the security setup. Also, there's going to be native swaps. So basically, the idea is that from this portal, you can do everything that you need to do, swapping tokens, accessing the ecosystem. And there's also going to be a tab, and that leads me into the streaming part of it, where you can go to the stream page and view the top content creators in crypto streaming on Abstract, which is what the headline also is. They had 17,000 applications that they reported who applied to be able to become streamers on Abstract Live, which is going to be Abstract's native streaming platform. Not a lot of details are publicly known around how it's going to work exactly. There's been a couple of comments, posts, replies, teasing going on. Luca himself said that the top streamers, I think, will make 7 figures from streaming on Abstract. So they are obviously very hyped about that and have been marketing that quite strongly, which also led again to 17,000 people wanting to apply for that. And I am also very curious to see how that is going to work and play out. I think I read that there's going to be tipping in Penguin, a couple more other things coming to that, but I guess we'll see more details on that once Abstract launches later today.
Beautiful. Beautiful summary. Yeah, as you said, an interesting quirk, I guess, of this launch is that they're, trying to push their own wallet at the same time. So I think the global wallet is something that'll be interesting to see. And this big focus on streaming makes so much sense. Just think, like, people tried to do that organically for Blast, like, because it got people so excited, lots of people kind of took it upon themselves to do that stuff by themselves. But to give people the platform and feel like they're on an official platform, I think is what people really like, to feel empowered that they're actually going to go out and you're being recognized by the platform in some way, and then people can kind of start collaborating with each other as they discover each other more on the through the official channels, and that means they're kind of taking some ownership over that channel as well. So I think I'm pretty curious to see how that goes. Obviously, we're super bullish on live content as well. We've had private discussions of like, how should we expand the show, and should we do recorded podcasts? There's lots of successful recorded stuff. There are advantages to that as well, right? But we thought, nah, live is the way to go for now. Everything else is a highlight. So that's kind of our thinking. Very, very bullish on the live format. But that is our show for today. Hope you enjoyed it. Just a reminder, friends, we do this every single day, Monday to Friday at 7 a.m. Eastern time, live for 1 hour. We do it on YouTube, Twitter, and you can catch us up on Apple and Spotify podcasts as well. Have a wonderful day. Take care, and we will see you tomorrow. Bye-bye.